Estate Insider, where America goes for funding, coming to you live. Every week we do our live podcast, Real Estate Insider. We come to educate you, empower you, give you the information, give you the knowledge about real estate, finance, and credit. And just so you guys remember, we're a direct nationwide commercial, residential, and a private lender. We've been doing it for over 20 years, helping hundreds of thousands of people. So please don't be a stranger. Give us a call, text my office, 832-431-6331. Love to hear from you. Tonight we're talking about, we're going to break down what exactly does it take to get a pre-approval, okay, for a home loan. Because we get this question, thousands of times per month, and we've done a lot of videos, a lot of podcasts talking about what is the requirements, what's the process to actually get pre-approved, what's the difference between a pre-qualification, a pre-approval, a loan commitment, a clear to close. So it's very important that you understand when you're getting a mortgage loan, that you understand what exactly does it take to get pre-approved, and that you get that process done before you go under contract. Because once you go under contract with the seller or the broker, usually that money that you put down to lock up the property is non-refundable. So it's very important that that you make sure that you get pre-approved for the right product. You understand what your payments are, if you have any cash to close out of pocket, what your out-of-pocket expenses are. Okay. So what we're going to be talking about tonight is namely that, specifically, what does it take to actually get pre-approved? So, and we're talking about for any type of loan, whether it's commercial, residential, hard money, there is a pre-approval process, and you want to make sure that you're meeting those requirements. Okay. So the first thing is that when you're starting a loan process, I don't care if it's a home loan or $100 million, commercial multifamily, you want to get your pre-approval done. And what that consists of is you're going to have to fill out an application with the lender. Now, you're not applying for the loan with us, for example. When you're filling out the application, you're doing an enrollment. In that enrollment, you're going to put down your information, your job, your assets, your home, your living, your debts, all that stuff. And you're going to put all that on an application. Now, you're not applying for a home loan at this time or any mortgage loan with an underwriter, but we need to get that data. Then depending on the type of loan that you're doing, you have to supply financial documents and credit. So we're going to pull your credit as the lender. We're going to do a soft check only. We're not going to do a hard check. And we're going to order that soft check. It's going to pull all three of your credit bureaus, Equifax, TransUnion, and Experian. And then you're going to submit to us your bank statements, your W-2s, your tax returns, your retirement accounts, your stock accounts, your property, if your LLCs, leases, whatever. It's going to be very tailored and specific to you. Some loans do not require tax returns. Some loans do not require LLCs. So we're going to customize it based on what your situation is. Not everyone has to provide the same set of documents. So I want to make sure that you guys are aware of that, because I'm not saying that everyone has to supply, 6 months reserves, 20% down, tax. It's all based on the product. Like no doc hard money loans, they don't require any of that. Conventional loans do. So we're going to find out from you, what are you trying to do? And then what's the realm of possibility based on your situation to see if we can get that type of loan for you. And here's the checklist. And then we're going to give you that checklist. And then we're going to work on building your file out together with our loan care team and the lender. And the lender on our team is going to have a meeting with you. That loan process, the building of your file, the construction of it, takes usually about a week. Okay, and you're going to upload everything to the secure portal. And then we're going to download it all and then have a meeting, go over everything. Okay, say, hey, you want to buy a house in Austin, Texas for $2 million, and you've owned your business for 7 years. You make this much money per month. You have this much money to put down. You want to do this in 3 months. Okay, your credit score is 710. So then we go through that the analysis to say, okay, based on this situation, we think you should do a non-QM loan. We think you should do a no-doc loan. We think you should do a jumbo loan. These loans have this interest rate, this much money you have to invest. It's a 30-year fix. There's no prepayment penalty. And then from there, we give you a pre-approval letter. And that approval letter is a certificate. And then you take that with either our realtor, we have a nationwide realty team, or you can use your own agent. And then you take that to start shopping for your property. If you're buying, if you're refinancing, You're not going to work with a realtor, and you're not going to get a pre-approval letter. You'll just be notified that you got pre-approved for the loan, because it's different when you're refinancing versus buying. When you're buying, you have to get pre-approved, get a pre-approval letter, and then you'll take that with your broker, or you don't need an agent. You can do it on your own. So it's up to you. But you'll actually get an official approval letter, and then on a refinance, you will not get a pre-approval letter. And then from there, let's assume that you're purchasing a house, because if you're refinancing, obviously it's a lot easier. But let's assume that you're purchasing a home, then you'll start shopping for the home, and you have this approval letter in hand, and it's usually good for 3 months. Okay, and keep in mind, we've just done a soft check. We have not applied for the official loan with the bank yet. We just kind of preliminary approved you based on your information and based on the loan product requirements. And we matched it up, and it said that you do qualify. And we also ran it through an automated system on most of the loans that have an automated system of software that determines your approval or not. Now, some loans do not have that. It's a manual review from an actual underwriter, but they have published guidelines that indicate the eligibility requirements. Okay, so from there, you found a house, and now you want to make an offer on the home, and this is where you work with your agent to negotiate closing time, contingencies, inspections, closing cost allowance, move out dates, all that stuff is what you'll handle with your realtor. The lender normally doesn't get involved in that part of the transaction. Their clock really starts when they get the copy of the signed purchase contract. Now they could be involved. Obviously, the seller or the listing agent may want to communicate with the lender, and that's fine, and talk about things. And there is going to be some communication, but the bulk of it's done by the agents. They're handling the negotiations. From there, they get us the executed purchase contract, and then we start to process the loan. And now we're getting ready to apply with the bank for the loan. Okay, so from here, your loan package will be sent out to you via your loan disclosures electronically. Everything's done electronically. They don't mail stuff. They don't fax stuff anymore. It's all emailed to you, and it's all secure and encrypted via DocuSign. All right. And so those loan documents will come out to you now that you found the house. Now you have to sign those documents electronically. Now, the documents that you're signing are not binding. They're not a contract, but they have to be signed in order for you to move forward with the loan, order the inspection, or the appraisal. Everything's triggered off the application date and the date that you sign. Your interest rate's most likely not locked in at this time. Okay? You're just signing the initial loan package to keep the loan moving forward. And this loan package, and you're going to sign several drafts of this. You might sign 5 or 6 drafts of the loan disclosure until you actually lock the rate and you get a final closing disclosure. And usually this is done a week or 2 prior to closing. So up until then, you're just working on drafts of estimates, and they're not binding. Okay. But once you get closer, and we get closer to closing, we've got the appraisal in, everything's fine. You got the inspection in, everything's fine. Then you're going to get a conditional loan commitment from the underwriter of the bank. They're going to say, we reviewed everything. It's a great loan. We'd love to close this for you. Now here's a checklist that you have to supply to close this loan. Okay, so now they're going to give you a checklist that you have to supply. And this checklist could be, updated pay stubs, updated bank statements. If you had any issues with your credit, a letter of explanation. If you are paying off any debt at closing, maybe a payoff for your credit card. If you have child support or judgments, explanations about that. If you had auto repo, explanations about that. Any delinquencies. If you had any, gaps in employment, they want explanations about that. Maybe they need, updated something with the insurance to reflect that the lender is on the insurance policy. They may need some clarification if your LLC documents are not adding up. So they're just kind of fine tuning everything. They're not picking on you. They're just going through a checklist. Think of it like if you're going through a checklist, if you're taking off flying a jet, a plane, sorry, I like to chew ice. Imagine if you're flying a plane with United Airlines, they have a checklist before they can actually take off on the plane. That's the same thing that's actually happening when you're getting a loan. We have a checklist. And so nobody is trying to pick on you, but that checklist has to be cleared in order to close on the loan. Okay. So you have to go through that checklist and clear it in order to actually get to closing. And then once you satisfy those conditions, like we talked about, you're going to be issued a clear to close. Now, depending on the type of loan that you're doing, before you get your clear to close, you would have signed something called an initial closing disclosure. And on primary residence loans, most of them, after you sign that, then you have to wait 3 days to close. There are some products. Um, oh, cool. Awesome. Thank you, King. You're the man. So, some products, like investment properties, hard money bridge loans, this ICD and these type of CDs don't apply. But you may have a loan like a standard loan, or primary loan, where you have to sign the initial closing disclosure 3 days before you actually close. And then from there, you're going to get your closing disclosure. And that's the final locked in loan, based on that day's market interest rates that were available. So the interest rates are coming from the market, based on the economy, based on the stock market, the Federal Reserve, the investor, the lender, the product that you're doing, your credit score, the property type, mainly driven by the market. Okay, and then the product type. Those are going to be the two major drivers. Anyway, we lock in the rate. You sign your closing disclosure, and then you get your clear to close. That means the underwriter has signed off on everything, and now it's time for you to go to closing. Now the title company will call you and then schedule a time for you to either you come to their office to do the closing, either at the title company, the attorney's office, your home, a restaurant. You can meet really anywhere, as long as there's a notary, in most states. So some states require that you close in an attorney's office. It just depends on the product and the state, but you're going to have an official signing, and that's the bottom line. Now, these documents will be wet signed, 90% of the time. Now, the market is moving to electronic closing documents, and there are some products that allow that. But right now, you will wet sign these documents, and then that loan will get recorded to that property. Then we'll send the wire, and the loan will fund us as the bank will fund the loan, and then the title company where you close will disperse the money to all parties based on their instructions. And then from there, you'll be recorded, that you have a mortgage on your property, that you're on the title, and then your deed of trust will be recorded, and then your loan payment will kick in usually 30 to 60 days after. So that's basically, in a nutshell, what it takes to get pre-approved, the home buying process, whether you're refinancing, whether you're purchasing. This is what everybody has to go through. It doesn't matter if you're, Jane Doe or Donald Trump. We have a home loan process. If you're getting a loan, Donald Trump probably doesn't need a loan, but you get the point that, if you're going through the loan process and you're getting financing, regardless of the lender or mortgage company you use, you're going to go through this process. Now, the steps may be different. A lot of people right now are using AI, technology. We're still, face to face, personal interaction, answer the phone. We love, the human interaction, and we think AI is great, but we're not going to let that run our whole business. We just don't. We're not a big advocate of it as of today. But some places are different. They love it and they use it. But anyway, that's what it takes to get pre-approved. Remember, we're a direct, nationwide lender. We do commercial lending, residential, private lending. If we can help you, definitely don't be a stranger. Reach out to us. You can give us a call, text my office, 832-431-6331. That's where America goes for funding. All the links are down below to Angelo Christian website or YouTube. How many times the credit? Well, there's one soft pull in the beginning, and then if the loan closes within 3 months, there's one hard pull, and then there's another soft pull at the end. Okay. Now, if the loan took longer than 3 months to close, you could see another hard pull. But if you close within 3 months, you should only have one hard pull, but there is another soft pull at the end. Okay. And why do they do that? Because they want to see if you took on any more debts while you were getting a loan. So that's one thing that, and I've done a lot of videos on that. Do not take on any more debt while you're getting a loan, because they do check that. So, but it's a good question. A lot of people do not know that. So, very good question. So, anyway, don't be a stranger, guys. Reach out to us. Call, text my office if we can help you. 832-431-6331. It's where America goes for funding. All of our links down below for Angelo Christian, our website. You can also, if you want to become a loan partner and get paid for your referrals, reach out to us about our loan partner program. So get signed up as a broker. Um, how many days? 3 days before closing. Usually, could be 2 days, could be 1 day. Just depends how busy everyone is. But minimum 3 days, yeah. So, good questions, man. Anyway, appreciate you for reaching out and all your support with the channel. It means a lot to us. We're open 7 to 8 days a week. Don't forget, call or text me if I can help you, 832-431-6331. And then, like I said, all of our links, YouTube, Instagram down below. Reach out to us. Thank you, King. Appreciate you, man. God bless, and thank you for your support. Happy for your closing next week. So we'll be back again, too, guys, next week. Enjoy your weekend. Check out, browse the channel. If you know anyone that can get great value from watching this, share this. Don't forget to subscribe. Give us a thumbs up, enable notifications. We need all the help and support that we can get. So we appreciate everything, guys. Take care with your family. Stay strong. We love you guys. We'll see y'all next week. Take care. Peace out.